given how fast the environment is changing, the volatility that we've seen, what do you see as the new opportunities out there to put that money to work?
Yeah. Well, one of the things that I think is really exciting, and by the way, thank you for having me. It's so nice to be here in person instead of on Zoom.
To the studio.
What makes this moment, we think so unique in crypto is that we've seen, crypto by its nature has been kind of cyclical. But one of the things we've seen in the last year is that whole new audiences are coming in. So one of the earliest use cases of crypto systems, of course, were financial use cases. And one of the things we've seen for the last year plus are entirely new kind of audiences coming in, a real mainstreaming of crypto across things like NFTs, DAOs, DeFi, and many other kind of applications. Of course, DeFi is also a financial application, but these are the kind of bleeding edges of crypto that we are very excited about, and we're excited to put the new fund to work.
Now, given the market volatility, and I know that you're investing at the earliest stages, but the markets have come down, across the board when you look at, coins themselves. Has that impacted how you're making investments at all?
It really hasn't, actually. And let me tell you why. We are focused on kind of a 7 to 10 year view, Emily. We're not a crypto hedge fund. Many crypto funds are hedge funds. They're trading in and out of coins and tokens. We're not. We're making long-term bets on kind of infrastructure plays, architecture plays, and things, like I said, like platforms. I mean, you mentioned Coinbase, but, there are platforms out there like OpenSea, and it's a great moment for example, NFTs. So,
since you mentioned OpenSea, I know that's another company you just invested in. You're joining the board there, focused on NFTs. NFTs seem to have a lot of hype over the last 6 months, and that seems to be fading. Why don't you think that this is a fad?
Yeah, I don't think so, and let me tell you why. I mean, many people focus on NFTs and think it's just only digital art, and it's actually much more than that. It's a new economic kind of paradigm for the web, and I really believe, and we at Andreessen Horowitz Crypto believe, that this is really going to redefine the web by putting power directly into the hands of creators, not just of digital artists, but of all kinds of content creators, from media to entertainers, sports figures, and many others, and also into the hands of users, power into the hands of users, and away from centralized platforms, things like YouTube, which have pretty high take rates and high barriers to entry. And so we see that changing right now already.
Now, obviously you're an investor in Coinbase, but would it make sense to invest in any new crypto exchanges, or are the ones we have enough?
Yeah, I mean, we're kind of seed agnostic, stage agnostic, and we're looking across it. You mentioned exchanges, which are picks and shovels, and we certainly expect to deploy part of this new $2.2 billion fund into kind of picks and shovels, but we're also investing heavily in tokens, things like DAOs, other platforms, like we've talked about OpenSea, and I am joining the board. And OpenSea really sits at, we think, really this unique position where they, much like Coinbase, you mentioned, allowed an early class of consumers, ordinary people, to access crypto, like Bitcoin and Ethereum in those early days. OpenSea is mainstreaming kind of NFTs and this whole new experience for a whole new class of users. And that's why this year we've seen a further mainstreaming of crypto happen. You have now sports fans. They weren't crypto natives, and they weren't even people particularly focused on crypto. But those sports fans are lining up to purchase things like Top Shots.
And they're also lining up on Robinhood. I spoke to Vlad Tenev yesterday, and he said crypto transactions are becoming an increasingly big part of their pie. Yep. What does it mean to have Robinhood be more involved in this space, more retail trading happening in crypto, and much more accessible? But I think sometimes the concern is that retail investors don't always know exactly what they're getting into.
Well, so Robinhood is a part of the Andreessen Horowitz portfolio, albeit not part of the crypto fund.
Right.
So I just want to state that
first, right off here. You are an investor in Robinhood.
Yeah.
I know that.
Yeah, but not the crypto fund.
Yeah.
The venture fund and our late stage growth fund. And I think what Robinhood has done for kind of democratizing access to finance is very, among new classes of people, is really in line with the ethos of crypto, of course, which is democratizing access, and what it's done for a whole new generation of users to become interested in finance, I think is really cool. So we think there's a lot of opportunity ahead. That said, I'm not close to the company. We're really focused on crypto.
Now, there's a new infrastructure bill in Congress that would proposing to raise $28 billion in taxes on crypto investors. Individuals might have to start disclosing more of their transactions. What's your take on this?
Yeah, look, my take on this, I've seen a lot of media headlines in the last days characterizing this infrastructure bill. But my take on this is actually it's actually further mainstreaming of crypto because it's a recognition on the part of 67 senators right now who voted for this bill that crypto is big. Crypto is a big portion of the economy. It's here to stay, and it's growing. So I think it's actually kind of putting its imprimatur on the fact that crypto's not going anywhere. This is not an industry that's kind of hiding in the shadows. Now, I do want to say on the infrastructure bill, there are some pieces of it, putting my con law hat on, that I don't agree with. I think are a little bit vague and overbroad. For example, the notion that smart contracts and computer code can generate 1099s, for example. And of course, we're actively working with policymakers and legislators behind the scenes with our incredible policy team at Andreessen Horowitz that we've really built out to help inform this.
So can you tell us what Gary Gensler plans to do? Because we all want to know how crypto is going to be regulated in the United States.
Well, I think, look, one really important point where you talk about Gary Gensler and the SEC is to recognize that crypto is not a monolith. As I said, there are DAOs, there are NFTs, there are financial use cases, and certainly where there are tokens that are securities or that might be securities or touch on financial use cases, consumer protection. You know, we are all for responsible innovation. We just want more regulatory clarity. So we would like to hear what Gary Gensler plans to do. But it's important to remember there's a whole big part of this ecosystem that has nothing to do with SEC regulations. I mean, would you think that a digital version of a baseball card or a piece of art, should that be regulated by the SEC? It's not in the physical world, and we don't think it should be just because it's in a digital form and has the word crypto in it or uses crypto architecture.
Now, again, I know that some of these are Andreessen Horowitz companies, but do you think that the blockchain is a threat to companies, centralized networks like Facebook, like Twitter, like Google?
Oh, for sure. I absolutely do think so. Because again, the ethos of crypto is decentralization, and it's shifting power away from a centralized few. So I do very much think so. And you know, Emily, I think that's one reason why yesterday you heard Mark Zuckerberg 28 times mention the metaverse and the content creator economy. They see this is coming. It's not just tech incumbents. Coca-Cola, I don't know if you caught this news, but Coca-Cola yesterday announced it will be doing NFTs on Decentraland. So this is not a fad. This is very much something that we think is here to stay. And yes, big tech certainly recognizes this.
So talk to me about, you know, do you think Facebook will be the one to lead the metaverse, or will it be, someone? Will it be everyone and not Mark Zuckerberg?
Yeah,
if you know what I mean.
Well, I think, look, one of the things about the metaverse and about crypto is it's open and the barriers to entry are low. And I think one of the things we see is we see tremendous innovation happening outside the United States. I can't tell you how many entrepreneurs we're seeing that are experimenting with crypto plays in the metaverse. The gaming, the intersection, by the way, of gaming and crypto is just, we're seeing kind of an explosion there. And we're seeing it happen all over the place. Southeast Asia, Australia, Europe, Africa. Really, it's not just limited to the US, and that's one of our messages to US regulators is let's harness this. Let's really encourage this important innovation. It's a real driver of economic activity.
You mentioned DAOs a couple of times, which is something we've not talked a lot about on this show, and I wonder if you could explain in the simplest terms what they are and why they could be so important.
Sure. Well, let's start by breaking down the acronym DAOs. You know, crypto, like all fields, has a lot of acronyms. DAOs, Decentralized Autonomous Organization. And basically the easiest way to think about it, Emily, is if you think about a company in the traditional world and you think about shareholders, DAOs are a new way for people to organize. So almost, if you will, like shareholders. And instead of a company, there's a piece of computer code, and people can organize all around this. But actually, unlike just shareholders in the traditional corporate context, with the DAO, you have these communities of people all over the world that are actively participating in management decisions, in governance decisions, in technical design decisions involving these protocols. So that's something really interesting. It's very bleeding edge, and we're seeing a lot more activity happening. And that's why one of the reasons why we've been investing in this space for years. You know, other VCs are starting to kind of try and participate with DAOs. But of course, one thing about traditional VCs are they need to maximize ownership, which is a little bit against the ethos of these DAOs, against community participation. And we've pioneered, because we've been in this space for years, this really bespoke, really unique delegate program. So we can still maximize ownership for our LPs, for our fiduciary duty, but at the same time contribute to decentralization. So we have delegates that we delegate our stake, ranging from universities, NGOs like Kiva and Mercy Corps, and even corporates.